What's up, traders? How many times you have seen a trade and said that, wow, I'm gonna win this trade today, and then you placed a pending order, you fall asleep because you're gonna win the trade, and you started to dream about the Lamborghini that you will be launching tonight. The Lamborghini came to you dream just to turn the dream into nightmare, because the trade has not just been triggered just for 1 or 2 pip.
No! No! No!
If this have ever happened to you, then this video is for you, because in this video I will be showing you exactly what location you should choose to place a pending order so that your trade is triggered. Sound interesting? Then let's get started. Okay guys, so before I begin, make sure you smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. So let's see a couple of examples. We'll consider a couple of scenarios to show you where to place a pending order so that the pending order is triggered. I know that it looks very frustrating when the pending order is not triggered. So let's consider a couple of scenarios. The first scenario that we will be considering is the reversal trade. Let's assume that you want to trade reversal. So what do I mean with it? Let's say you found a double top formation, which is a very common trading example. You found a double top and the price broke down after this double top, or you found a head and shoulder, nice head and shoulder like that, okay, and then the price broke down. Now consider these two common reversal pattern. It could be any other different reversal pattern, but these two are common. Now once you found the double top or double bottom formation, so the first thing in any kind of pending order you need to look for is the area of value. It's very important. You need to identify the right area of value. I will show you in chart, but let me give you a quick example. So let's say you found a double top, okay, and the price broke down. Once the price broke down, if you jump on a trade, it's not a good idea, okay. You need to find the right location to place the pending order, because when you place the pending order in the right place, only then you can find a good risk to reward ratio in your trade. Let's consider this double top formation. So what is the area of value for this double top? This is the area of value, okay. Keep in mind, this is the area of value for this double top formation. Once the price broke down, if you just trading after the breakdown, do not jump on a trade, wait for the price to come back to the area of value again. This is how the market moves. When the market moves or breaks out, the price come back again to the area of value. So this is where you have to place your pending order, below the area of value or above the area of value, so that the pending order is triggered. Is simple. Now let me show you quite a few scenarios and examples for reversal trade as well as for trend trading. So this is double top for area of value for double top, and the area of value for head and shoulder the same way. So if you find the area of value for head and shoulder is the neckline of this head and shoulder, and you have to place the pending order. Whatever time frame you are trading, you need to place the pending order in an area of value so that the pending order is triggered. Now let's see a couple of examples so that you can understand it clearly where you should place your pending order. Okay, so let's consider this trade on euro dollar on 4-hour time frame. I will show you on the lower time frame as well. So let's consider that this is 4-hour time frame on euro dollar, and you found a nice reversal trade. So what is that? Look at this one here. The price broke above. This is an overall downtrending market. You see it's a clearly defined downtrending market, creating a series of lower high and lower low, and at some point we saw that the price overextended to the upside with this big move, and then broke down again, went above, and then broke down. So we saw a nicely looking double top formation. This is the move up down and then move up and then broke down. So we have seen a double top formation is formed, and then with this bearish candle the price broke down from this double top formation. Now once you found this red candle, this is where if you jump on a trade, you say that, oh my god, I'm gonna trade from here, selling and keeping stop loss, you will have a horrible risk to reward ratio. Okay, so what you need to do is that you need to find the proper location to place a pending order. Now if you say that, okay, I'm gonna place a pending order here, okay, with this 20 period moving average, then you will be triggered, but still you will have a horrible risk to reward ratio. Okay, you might say, okay, the price may go up, okay, let me place the pending order here, then I will have a smaller tight stop loss, I will have a big risk to reward ratio. You might be ending up not triggering the trade. So that's why the first thing you need to find out in this double top, it's a reversal trade, where will be your area of value. So to do that, as I told you before, when you see a double top, okay, like that, let me draw this double top. So when you see a double top, okay, and the price broke down, this is the location that you need to look for the possible area of value. So this is the area of value. In most cases, when double top formation or any kind of reversal pattern, price should go there at some point to test this previous support as a resistance, and your pending order you have to put just below this area of value. So with that being said, look at this example here. What do you see? That see this long green candle, this is where the area of value. So for this one, because you will be, let's say you saw the double top, so you will sell the market, you have to first of all identify the area of value. Once you identified the area of value, and then let's say you identified the area of value, you exactly placed a line, and then you placed your pending order at 1.10253, then still you may not be triggered. Keep in mind, the reason is because you have a swap or a spread. So this is what you need to keep in mind. That's why you need to find out how many pips swap or a spread you have. If you don't want to calculate exactly, then at least couple of pips below of this area of value, that will give you the right place to place a pending order. In most cases, you will find that the price is going up there, testing this previous support as a resistance, and then the price will move, and that is the right way to place a pending order so that the trade is triggered. At the same time, you have a proper risk to reward ratio. So if we consider this one here, let's say you place a pending order here. Now the area of value is 1.1025. let's say you placed at 1.1023, and if you place your stop loss here, 1 to 2 risk to reward ratio will give you a nice, should be a winning trade. You see, so what you saw, that basically you see the price exactly when this area of value, this support has been penetrated to the upside and then strongly rejected to the downside. So that is where you need to place your pending order, finding the right location. Now this double top formation, this area of value can be different in different scenario. Let's consider another scenario that where we'll identify the area of value. Okay, so let's consider this example on gold on daily chart. This will give you a clear idea how to place a pending order. Make sure you stick till the end of this video. So what you saw, that gold has created a double top formation here, nice double top. Okay, it's a clearly visible double top with a rejection from the top. Now after this double top formation, what we see that the price broke down with a bearish candle. Now where is the area of value for this double top? As we have already discussed, it's a clearly seen. So if you draw the double top, you can see the move, correction, move, correction. So what happened, that this is a double top. Now this neckline is, as I discussed before, is where is the area of value. Now if you draw a box here, let's say here, this is where you need to place your pending order. Now the thing is that, see this one, if you replay that, this is the daily candle, you see the price still didn't reach there. That's what you need to keep in mind. Now let's delete this one here. Now if you place a pending order just with this support here, with this line, let's adjust this one. Now if you place a pending order here, let's say you found this support of this double top formation, the neckline, and you placed your pending order here, and the next day what happened? The price didn't trigger, just left you alone. Now why? That's what you need to understand. Not only this, look at the left. Okay, you see there is a strong doji here. Now when you see that there is another area of value near this support, that is what you need to consider. That's why you need a bit of wider range where you will place your pending order. So what you do when you see that area of value is here and nearest location there is another area of value, then place your pending order just below this area of value so that you can have a good probability of triggering the trade. So next day you will have triggered and it's a good gold trade. Now in that case, your stop loss should be at least above this high, and you can target 1 to 2 or whatever your strategy is saying. So this is how you have to place in this situation. Now let's consider that your trade is triggered, you placed it here. Now what next? Let's find out another trading opportunity in this one. Now as you see that the price has started to move down, now let's find out another trade where you have to do the same, you have to take the same decision. Now the price moved up, so you see that this is the gold chart and it's a good instrument to trade. So now you saw there is another pin bar has been formed, so it's a doji. Okay, now why this doji? Once this doji has been formed, now you want to trade this doji. Okay, now if you trade this doji immediately as soon as the candle close, it's also not a good idea to trade a doji immediately, because as in that case also you will have a horrible risk to reward ratio. Now after this doji form, then where should you place your pending order to trade this daily doji, this one? Okay, now you might say, okay, this doji I will be trading short from here. Okay, at the top of the doji, placing my stop loss above this high, then let's see what happened. Okay, if you replay the chart, you will see that the same thing is likely to happen. You see that your trade has not been triggered. Now you see that the next day or couple of days later, the price went above, okay, to the zone and rejected from here strongly to the downside. Now if you know why the price rejected from here, then in most cases you will know exactly where to place your pending order and you can have a nice winning trade so that you can dream that Lamborghini. So let's find out why the price rejected from here and why you should place your pending order here. What are the factors involved here? So once this doji has been formed, you decided to take this trade and now you need to find the area of value. See, look at the past. That's what you need to do. Once this double top formation has been formed, okay, the price broke down, okay, and once the price broke down, the price now went above for a retracement. Now in this retracement, the first of all, why this doji rejected from here? The reason is very, very simple. Once you saw this kind, you see on this daily time frame, after the breakdown, the price has created a nice trend line on the daily time frame. Okay, this is what you need to keep it, creating a series of lower high. It has created a trend line. Now if you say that, okay, forex user told me that I should place a pending order here, so I take a horizontal level here and then I placed a pending order, but the trade didn't trigger. That's what you need to keep in mind, that this one, that you see there is no smooth trend line, but in this one you have found a nice smooth trend line, and you need to find out that trend line, that line where the price is likely to come and trigger your trade. You see the price is following exactly that trend line. If you see, there is a support here, okay, support here, and now acted as a resistance here, rejected. So once you saw that this doji has been rejected from this area of value, that means that you have seen that this trend line is being respected. Next time the price will come to test this trend line. Now at the same time, you have found that there is a 20 period moving average here, and the price exactly rejected from here. So what is the area of value for this one? This trend line. And once you place a pending order, you have to place a pending order so that the price remain below this trend line. Now it could be the head of the doji or above this, so that could be a good area of value. As you can see, that when the price broke down, there is a nice green candle has been formed, and then again the price broke to the downside. So this location is the perfect area of value for placing the pending order. Why? Because as you can see, there is a 20 period moving average in this line. There is a green candle in this among all this red movement, and that is where you can place your pending order, keeping your stop loss above the trend line somewhere here, and then there is a high probability that your trade will be triggered. Now let's see a couple of more scenario with other kind of pattern. Okay guys, so let's see this example on gold. Same thing. Where now let's consider a trend trading opportunity where you want to trade with the trend, but where should you place your pending order so that the pending order is triggered? Now as you can see, this is the gold, and we saw a nice double bottom has been formed. Okay, this is a very, very nice double bottom, and after this double bottom, what you saw, this is a very, very strong double bottom, and the price broke above. Okay, came for retracement, broke above, so starting up a new trend. So what is the market structure for a trend? If you see a double bottom, okay, like the double bottom, and then the price broke above, tested the previous support as a resistance as a support, now broke above. So we can expect now the market to move, creating a series of higher high and higher low. So in a trending market, once you identify the direction of the trend, market structure in a trending market, without any question, the area of value is this one. This previous resistance, let's say it's in an uptrend, previous resistance as a support is where the area of value. So all the time when you see an uptrend, without any question, the previous resistance as a support is where the area of value. Now with that being said, let's see this gold trade here. Now where is the area of value for this gold trade? As you can see that after the double bottom formation, the price created nice structure to the upside. It's a clearly defined uptrend now because there is a double top, pardon me, double bottom, and the price broke above. Now where is the next area of value? This previous swing high is where the area of value. Now if you place a line here, okay, a level here on this zone, this is where you have to place your pending order so that the trade is triggered. Now let's replay this chart and see. You see the price went above, but you have to be patient for the price to come. You see, this is what happened. The price came here and is strongly rejected. Now this long wick basically represents that the price tested this previous resistance, as a support. Now when you see a long wick, that means that there has been a huge momentum, a lot of people bought from this zone. That is where the area of value. And let's replay the chart and you'll see that the price definitely strongly rejected to the upside. Okay guys, so let's see this example on dollar yen. Now what you see that there is a shooting star at the top. So when you see, this is the weekly chart, we will not be trading on the weekly, but when you want to see an area of value, you might need to look at the higher time frame to find it, and then that area of value you will be using on the lower time frame for entry. Now on the weekly time frame, we have seen that dollar yen has created a nice looking shooting star. Now there is a significance in this shooting star. When you see a shooting star like this at the top, is a nice instrument to trade because it has a narrow space for a stop loss, can have a good risk to reward ratio. Now how do you identify the area of value for the shooting star? See, when you see this kind of shooting star, the next area of value is this one. Why? Because see, this is where the previous week's high, the price came down up here on the weekly previous week, and then the price retraced to this level, closed here. As soon as the market opened next week, the price came down and then went above to this level, came back down and closed here. Now in that situation, what you can consider, that this previous week's high where the price has been rejected and created this downward movement in this uptrending market, this is where the nice area of value. So once you identify the area of value, now go to the lower time frame such as on the 4 hour. Okay, now this is where you can find an area of value. You see, this is what exactly we already discussed, that what you saw that on the weekly, what is our area of value on the 4 hour as well. This is a nice area of value. There is a absolutely nice double bottom formation. The price then broke to the upside. Now what happened after that? You see this resistance here, okay, on this double bottom formation now can act as a support. And now what you can consider, use, as I told you, see, this is what you have found on the weekly. Now you can readjust this level for the 4 hour time frame, and you can find easily your place of pending order just couple of pips above this resistance. So let's say this one will be a nice place to give your pending order. Let me delete this one. So what you saw that this 122.47 is where area of value, and if you look at this, you see the price exactly came there, you see, created this doji. And let's replay the chart to see what happened. The price penetrated to the downside, and definitely your stop loss is not been here. As I told you, you need to place your stop loss above, well below this area of value, so that if it creates a false breakout, you are not hit your stop loss, and then you can consider good buy trade, and this is a nice winning trade. So these are the way you can place your pending order so that it is triggered and you can find a good trading opportunity. I sincerely believe that this video was helpful to you. If you find value in this video, then don't forget to smash the like button, and also don't forget to subscribe, and don't forget to join my live streaming every day I'm doing during London and New York session. Thank you for watching. See you soon in my next video.